Alright, now we all know the signs of a hot housing market, from the price spikes, the bidding wars, and the frenzied open houses, the crazy pace that a lot of people are saying are unsustainable, and wondering, is the market getting ready to cool off? Is a market correction about to happen? In today's episode, you're going to learn 7 signs to watch to be able to answer the question, is the housing market cooling off, and give you some insight of what your next best step is to do. My name is Andrew Finney, your real estate geek. If you need help finding a top agent where you live, or if you simply want to drop me a line to say hello, my contact info is below. If you're new here, please go ahead and subscribe to this channel now and like this video. Tap the bell icon to get notified of the next one. Okay team, let's take a closer look at this. All markets ebb and flow with time, and all things change based upon a myriad factors. In specific, when it comes to real estate, what we take a look at is supply and demand, interest rates, the overall health of the economy, and understand the market cycles and the market conditions in your local area as a home buyer is going to indicate to you whether now's the right time for you to get into home buying mode and go ahead and strike when this iron is hot. Now, these steps will work at any point in time that you're watching this episode well into the future as signs to watch for a potential cool down in the marketplace. Let's go ahead and lead in with sign number 1, which is decreased home value. Now, this is critically important to watch. Tracking average prices is a good way to spot the overall trend of where the market's headed, where it's been, and where it looks like it's going. Now, we can watch overall pricing trends by watching not only how much your home's going on the market for, how long they've been on the market, and also watching for any kind of price reductions, right? By watching these things, it will indicate to us how much buyer demand is actually there for the supply of homes, which is the inventory being sold, right? So it'll indicate to us how strong the market really is. If you're wondering how can you track this information on your own, I'm going to share some very helpful links for you in the show more description below, courtesy of the Federal Housing Agency, which provides a wealth of information through its housing price index, which is known as the HPI. So that link is down below. The HPI, the housing price index, is a broad measure of the movement of single family home prices and publishes it every single month and in quarterly reports. The second sign you want to watch are pricing history and price cuts. Now, fortunately, there's a lot of information out there. If you're working with a trusted real estate advisor right now, you may have noticed those little pings that you get every now and then in almost real time. You get it at like 1:30 in the morning. You're like, hey, is my agent up sending me things? Because I'm just saying it's 1:30 in the morning. What we've done is we've tapped into a real-time network for you to get you the most accurate information. And you might notice, hey, this has been price reduced. Hey, this has been price reduced. And you might be thinking it wasn't that long ago that everybody seemed to be bidding on the property and you couldn't get in the one and it was nuts. So why are so many homes being price reduced? It's a telltale sign that the market is cooling off and it's headed towards a market correction. A market correction does not mean that it's going to nosedive straight into a buyer's market. A market correction means that you'll see a slower rate of home appreciation going forward in the next few years, however long that period of market correction lasts, right? So there's things that you want to pay attention to with the pricing history and the price cuts to know what's going on in your market. It's a very strong signal whenever you start seeing more and more price reduction that the market is not there for that price of home. So the sellers must, by proxy, be able to reduce their price to a sellable price that is amenable to you, the home buyer. The third thing that you want to look for is an increase on days on market. Now, your real estate agent might refer to this as like DOM, which is just an acronym for days on market, right? So in a super hot market, that's when you start seeing those homes that come on the market, they're gone. And then when you start slowing down a little bit, maybe it's on the market for like 5 or 7 days. Still extremely fast, right? So whenever you start seeing an increase in the average days on market to be able to get a home sold, that's another very strong indication the market is headed towards a cool down. If all of a sudden it goes from being a week to 2 weeks to 3 weeks to 4 weeks to 2 months or 3 months to get a home sold, you know the market is shifting and the market is correcting. Again, a market correction doesn't mean it's going to nosedive tomorrow into a buyer's market, but what it does mean is that the rate of appreciation for homes is slowing down and prices are gradually being corrected to what the market median is of what a home buyer is willing to pay for a home and what a home seller can sell their home for. The fourth thing to watch is higher inventory levels. Now, if you've noticed in a strong seller's market, there's like nothing available. Everything that comes up sells overnight. At least that's what it seems like, right? And in some cases, it's literally true. And I'm sure that you've seen that. So when we're talking about higher inventory levels, let's say in your marketplace, there was like 4,000 homes on the market at any given time, and every single month, 4,000 sold. Now, that's a very tight market, obviously. You have 0 months of inventory available. Now, whenever you start going from 4,000 to 5,000 to 6,000 to 7,000 homes on the market, that increase in homes being available on the market is another very strong indicator. Now, you could check your real estate agent's website for this information as well. My site, andrewfinneyteam.com, tracks this information in real time. It updates all the time. Every time a listing comes on the market, it's there. Every time a price reduction is happening, it lets you know, and it quantifies it in a very easy way to watch. If you're watching the total amount of available listings and you start seeing that number climb, climbing, inventory levels are going to greatly impact the supply and demand equation for sellers and buyers. Just saying, it could be a great time for you to get into being a home buyer because now you have more options and you know that it's going to be a much more fair and much more balanced approach as far as what a seller is willing to negotiate and what you're going to be able to negotiate as well. It's a much more balanced approach. The fifth sign to watch is new construction. New construction is really interesting because obviously what is it doing? It's adding inventory to the housing market from the resale homes to the new construction. As you add more and more homes to the market, it helps the opportunity grow for you, the incoming buyer, and purchasing your new home. So back in the crisis of what we saw in 2008, millions of construction workers lost their jobs, new construction completely flamed out and stalled. And that's why you saw such a huge hit and such slow reaction of home builders getting back into the market to build ever increasing amounts of homes to be able to help people. When you see more and more new construction being built, this is actually a good sign of a healthy and robust market. It also is a good sign of a stabilized market. It's really good to have a balance of the inventory between the supply and demand equation between you, the home buyer, and the home seller. Now, the sixth sign that you want to pay close attention to is called a low absorption rate. A low absorption rate is a very critical metric to understanding how market trends operate. An absorption rate is the frequency at which available homes are sold in the real estate market that you're in a specific real estate market at a given period of time. It's a very simple calculation that you can do by simply taking the average number of home sales per month and dividing that number by the total number of available homes in your marketplace at any given time. For reference, the key metric here that you want to pay attention to is the lower the absorption rate, the more the supply exceeds the demand, and when that happens, the market is correcting itself and it's a very strong signal to you. Now is a really good time to get into purchasing a home. Now, of course, there is no better time to buy or sell a home for that matter than when the time is right for you. I do want you to keep this in mind because don't let anyone pressure you into anything. It's all about you, and when the time is right for you, it'll be there. At the same time, if you've been on the fence about purchasing a home and you're wondering what the market is doing, watching these 7 signs are going to be a strong indication to you of what you should plan for doing next. They are very strong signals to you that it is a good time to buy. It's up to you how you choose to use this information. The 7th sign to watch is a slowed investor activity. Obviously, in a sizzling hot real estate market, what you see a lot of is investor activity spiking through the roof. And when new buyers gain the confidence not only to purchase a home, they start considering, what is it going to be like to be a real estate investor? How do I get started in real estate investing? And maybe I should get started in purchasing rental property or fix and flip property. So what you generally see from the seasoned real estate investor are 2 things. The first one is sometimes that's when they're saying, okay, we're hitting the peak, so let me go ahead and offload my assets and sell them now while the getting is good, make my profit, and wait for the next market correction, slow down to go back in and reinvest. That's one approach. The second approach investors will often take is simply leveraging the assets they already have to increase their portfolio and purchase more property. It's something to watch is your investor activity. Your investor activity is a strong signal of where the market is getting ready to do too. So now these are 7 very simple signs that you can watch to know what the market's getting ready to do and if it's headed for a potential market correction. What I'd like you to do is share with us in the comment section below what your thoughts are about this video and any other signs that you would like us to pay attention to know what the market is doing. Now I'm going to go ahead and pop up my contact information. If you simply want to drop me a line to say hello, or if you need help finding a top agent where you live, please let me know. Always love to hear from you. Always here to help you. If you haven't already done so, I'm going to ask you to do 3 things. Number 1, please subscribe to this channel. Number 2, please like this video. Number 3, please share this video around with someone you know it's going to be able to help, because someone just like you, and I'm sure you could think of somebody right now that's wondering, I wonder if now is the time to get into the real estate market. It was such a crazy hot seller's market. Does it mean that now is the time? And they're wondering about that. Share this with them so they can identify the 7 signs of a potential cool down in the market so they'll be able to decide what's best for them and theirs. Thank you. In between now and next time, I'm wishing you and yours a lifetime full of love, wealth, abundance, and happiness. Thank you for watching today, team, and enjoy an amazing day.